Morning, everyone. I'm Vince Lansing. This is the Gold Fix Market Rundown. Things are happening faster now, and when I see a bubble forming, I rush in to buy, adding fuel to the fire. That is not irrational. There's the home page. We'll be talking about the story that's front and center, just sent out to premium subscribers. Let's start with the markets. 10-year yields are 410 down 2. The dollar is 98.83 up 25. The S&P 500 is 67.27 up 9. The VIX is 16.97 down a quarter of a point. Gold is $4,036.80 up $52 off its highs but well off its lows. Silver is 48.97 up a buck 14, about to crack 49, knock on wood. Copper is 506, up 3 cents. Goldman Sachs has raised their target price for copper as well as gold. We'll see. WTI is up 54 cents at 62.76. Natural gas is up a penny. Bitcoin is up 1,400 off its highs, but picking up some pace. 44.91 is the price for Ethereum, up a bit. Palladium is up 46, up 3.5% at 13.91. Platinum 16.49, up 33. Gold, silver, softer, but did rally a bit yesterday on the whack in silver. We'll talk about that in a little bit. And grains are all up uniformly. When I say grains are up uniformly, what I mean is it's not crop related, it's not fundamental related, it's just funds buying, which means everyone is buying every commodity now. All right, let's go. Gold surged past $4,000 an ounce this morning, a day after Goldman Sachs lifted its price forecast to 4,900 by the end of 2026. The bank attributes the move to what it calls sticky inflows, steady buying from central banks and Western ETFs that now anchor gold's rally. Analysts Lena Thomas and Dan Stroivin say this structural demand has shifted the market's baseline higher, with risks still skewed to the upside. Silver followed suit, regaining momentum as investors rotated back into precious metals amid rate cut expectations. The shutdown does increase those chances, and continued official sector accumulation, not to mention the world's on the edge of a shitstorm. That continues in the premium post. Gold breaks 4,000 as Goldman raises the roof to almost 5,000. We'll come back to that in context when we get to the charts. Related posts yesterday, gold nears 4,000 as political turmoil and dollar strain fuel debasement trade. Debasement trade is an important phrase. It's now a mainstream media narrative. It talks about buy things to hedge a weakening dollar in the context of it politically being good because Trump is bad. Bloomberg asks, when will silver top its Hunt Brothers high? An amazing paraphrase of their title there, but they're talking about it now. The market rundown. Founders, Goldman re-raises targets over 10% to 4,900. That is the actual report sent out to founders yesterday. Special gold, silver, and Japan morning markets. That explains the beginning of this push higher on the back of Japan essentially throwing in the towel on any pretense that it will control inflation whatsoever. Gold Fix PM, silver shakeout begins. That's about the rumor about China and Rabo Francis, a submerging market. The chat, lively once again. We're trying to seed some things in there and add some value, but it's taken on its life of its own. And I'm very pleased to see some really good contributions from the founders helping the premium guys out. It's its own life now. So you're encouraged to go there. There's people that will answer and ask questions, and we'll throw something in there as well once in a while. Data today. Well, does data really matter? Yes, because there's a lack of it. So today's Wednesday, FOMC minutes come out. People will be looking to that for guidance with the lack of real data. We would remind you that despite the BLS data, which is or is not real, Some sites, Zero Hedge at the top of the chart there, have done a little bit of homework and gone to other reliable sites that are good proxies for unemployment, as well as other data. And I would say that's a place that you want to tune into. Thursday, Jerome Powell speaks, and Friday's consumer sentiment. Charts and final market check. All right, so let's look at the data first. Let's look at the upcoming event. October 15th is CPI. Someone is going to fill that gap and put that data out. So you want to be aware of where it's coming from. That's what the Wall Street lemmings will focus on, and you can decide if you want to join them or fight them. October 29th is the FOMC decision rate, right before Trump and Xi meet in China. Keep in mind that China is making um, motions to suggest that it be permitted to invest in the U.S. I'm not sure why they're doing that. Is it a pretense to look like they're being friendly going into the negotiation, throwing a bone, or are they sincere? Who cares? The point is, people are at least talking, and we'll see how that goes. The fact that I don't think Trump has responded makes me think that we're holding our cards close, whatever that means. Some phrases I put there. These are admonitions to myself. Don't get high on your own supply. Be long, but be aware. Markets don't trend, people do, meaning people's extrapolations of the market. It's going to go higher forever. That the market doesn't trend, people's emotions trend, and they push the market. Uh, China holiday logistics. We're going to get to that in a second. One of the things that I say, and this is to the chat people, we've been talking about how I've been managing risk, keeping, as things started to go parabolic, I peeled off everything but about 10% in orderly fashion. Well, the 10% is the 10% risk, right? I'm risking 10%. It's expressed in options now, and what's happening is the 10% is growing. You follow? Now, this is not a bragging point. The point is you have to be prepared to lose that 10% every day. And otherwise, you're going to, have a heart attack when you lose 50%, which I have done many, many times. So that's why I'm saying be long, just be aware. I also like to say you may not need the money now. I don't lose money you can afford to lose now. Now, I'm not trying to spook you, right? But if I had a YouTube channel and I wanted to spook you, this is what I would say to you. You may not need the money now, but you sure as shit will need the money if Trump's plan doesn't work. If this economy hits stagflation, which it almost certainly will to a degree, as this is an anti-Goldilocks era, then you have to assume the price of necessities double while your stock portfolio gets cut in half. Will you need the money then? Ask yourself that. And that's what I'm saying. Either we go through hell and we create a bubble that the real economy catches up, or we fail. And if we fail, we get 1977 to 1982 stagflation. And you better own gold and you better have a backup plan for your income. Will we repeat what happened then? I'm not saying we will, but there's a big fucking difference this time. 1977 and 1982, we were cutting deals with China to do trade with us. 1977 and 1982, we didn't have to build the economy back. We were shutting down manufacturing and ramping up financialization. This is a big road to hoe, folks. 1977 and 1982, everything was lined up for us. We didn't have to rebuild roads. We didn't have to make manufacturing great again. All we had to do was outsource, outsource, outsource. We didn't have to save money. We went off the gold standard. We were in the process of ramping up spending without any pushback. Countries did what we asked them to do. Nixon just cut a deal with Beijing or whatever the capital was then. We're at the opposite end of that now. While we're entering a potentially very stagflationary era, we're not stagflation right now. Depends on who you talk to. But while we are potentially on an era of stagflation, we had tailwinds to keep us from completely collapsing during that time frame. During that stagflationary era, again, we were cutting deals with China that had lasting impact. Number one. Number two, we were de-industrializing. So we didn't need to spend money on data centers or steel factories. We were gladly letting third world countries build our shit for us. And finally, the world wasn't pushing back. There was no BRICS. There was only China saying, you know what, we really, in 1977, China hated Russia. They were on the verge of a war themselves. The reason we cut the deal with China back then is because China and Russia were at opposite ends of the spectrum. Mao was not a fan of how Russia operated. And so China said, practical people that they are, any port in a storm, we'll buy your treasuries. Will you buy our goods? And we said, fine. Brilliant move by China. But now it's all reversed. It's all reversed now. China is cementing relationship with Russia. Ironically, neither nation is really communist. And we're on the outs. If there's a new Genoa conference, it's going to be China, Russia, and us. But we'll be Churchill at Yalta. We'll be potentially Churchill at Yalta. So what I'm saying is when we went through that stagflation era in the 70s, we had tailwinds pushing us up. Yugoslavia, we had bad inflation. Yugoslavia was worse. Yugoslavia collapsed when Tito died because they were lying about their economy. All the Russian economies were suffering. Lines for toilet paper, worse than COVID, if you can believe that. The UK was worse. We have headwinds now. The world has been pushing back on us since COVID. We need to spend the money not just on a social safety net of incoming immigrants or the money to deport them, however you look at it. We need to spend that money on rebuilding the streets, the roads, the roads to mining towns in Alaska, which is what we're doing now. That money's not growing on trees. Well, it is growing on trees. We're going to print it and we're going to spend it. We're either going to spend it and be economically robust or we're not. But the price of the things that you buy every day will go up anyway. That's all I'm saying. If Trump fails, if Trump can't succeed, however you want to look at it, stagflation is going to be your friend, whether you like it or not. Okay, so there's your doom for the moment. Let's go to the charts. All right. Yesterday, let's start with silver. Yesterday, in the PM post, I put a chart up. Let me clean my screen up here. I put a chart up, silver and gold. I put up the 30-minute chart, and I noted that at 11:30 yesterday, the silver price cracked. And I said, okay, rumors of China coming back online and making metal available, which is still a valid rumor. And this is what I said then. I said the market broke down from here. Below, the market was trading right around here at that moment when I made that statement. I said, below here, below this moment, below 48.10 is what I said. You're bearish. This is a short-term comment. Between 48.10 and 48.60, you're bearish neutral, right? Although it rallied in there, we don't care. Point is, we need to buy when it's safe, not when it's risky. Above here, which is where the whole thing started to leak, that's where you get bullish. And certainly they made it hard for you to get bullish. And there you have it. Sure enough, that's where we are now. Of course, this is the smart money saying, shit, it's going to go above there. I don't care. Let's go to gold. So there it is. Bullish above, meaning orderly, but that's an algo buying, by the way. Uh, uh, Bearish neutral, right? So it should have been bullish neutral, but who gives a shit? I wasn't trading it. And down here, bearish. So that's the way to look at it. You're not bearish on silver until it gets 48.60, at which point you become neutral. That's all I can say. That's a technical short-term comment. Wait, Trader Sumo, who's a friend of mine, we're mutuals. He's got a good product, Polytrends. Now, we tease each other a lot. He'll tell me his levels are great, and I'll say, well, they're probably the levels that I come up with a couple days later. And Usually on his longer lines, they're pretty obvious. So I end up being right. Let's see what we have today. He doesn't agree with me today. How dare you? All right, so that's his 30-minute. So below 48.77. Oh yeah, that's this line right here. Right. Yeah, I can see that. So he's basically taking my idea, or his system is, and he's saying you're long above 48.75. Okay, fine. So I will move my level, but not my behavior. Above 48.75, I'm outrageously bullish. On a test below 48.75, I want to see how it handles 48.60, and below 48.60, I'm neutral. Okay, so if it goes to 48.75 and dips below it, I will buy it coming back through 48.75 as long as it doesn't break this level. Let's go to gold. 30-minute. Yesterday I said 11:30 when silver cracked, gold tracked but wasn't cracked, right? And then when it recovered, my levels were uh, bearish below, I'm sorry, bearish below here, right? And then neutral in here, bearish below here, neutral in here, and bullish above it. And gold is an easier trade to do, right? It cracked, it recovered faster, it lingered. And I got to be honest with you. See this here? I wasn't bullish until it got above here. See this here? That would have chopped me up if I was playing my get long above there and get stopped out. But I'm expressing things with options now. So the money that I've committed is already lost, one way or another. So here we are. Those are the markets. That's short term. All this stuff that we're talking about, it's to keep your brain occupied, it's to keep you focused, and it's to keep you grounded. The bigger picture is coming into focus for a lot of people that are your friends, but aren't as literate in this stuff as you are. So this could be the top. It always could be the top. Just don't risk what you can't afford to lose. I'm Vince. Have a great day.